I don't think I would ever push one-on-one, because I don't think there's a reason to. Why run into a resistance point? But we still have clients today that want us to do that. Say, hey, I'm having a safety meeting for all my employees, and we're utilizing voluntary benefits to help keep our work comp claims down. So we need to educate them. So can you come in and talk to the people? And so they really get it. So I know they really understand how to utilize these benefits and what's the difference are. So in that case, there's still clients that want us to come in, or they have employees that have a lot of questions, and working hand in hand with our health brokers. Maybe it's a change in the medical plan. So they really want to sell the understanding, because the competitive landscape, as you mentioned, for employees is at an all-time high.
Yeah.
So it's not only going out and purchasing and trying to structure your benefit plan as an employer. How do we really engage people and differentiate ourselves that this is a company you want to come to work for? And one of those keys might be, look, we have real live people you can talk to if you have questions about your benefit program or how to set them up. So I think it's opening up doors kind of full circle, where it totally got away from anybody wanting to have, come within 6 feet of you to hey, this is an extra touch. Not only are we going to provide a strong benefit plan for you, we're going to bring in personal counselors to help you walk through this. So I think there's a value add there where, again, that kind of went out of style and can come back in. I don't think we'll ever get back to the level of engagement we have in a face-to-face or group settings pre-COVID, because it was a cultural changer.
Welcome to the Rockstars Rocking podcast, powered by Voluntary Disruption, a show dedicated to people who are crushing their business and life goals. These are bite-sized conversations with leading rock stars in their respective industry who are pumped to share their story to help drive you to the next level. So, are you ready to rock? Speaking of rock stars, here's your host, Eric Silverman.
Hey, rock stars, welcome back to another episode of Rockstars Rocking, where you know it. I say it every week. I only have the best rock stars rocking it out in their personal and their business life, doing some awesome, cool things that I can't wait for them to tell you about. And this week, guess what? It's no different. This week, I have my good longtime friend. We talk usually mostly about baseball. We'll try to not talk as much about baseball today, but no promises. Everybody meet Ty Elliott. If you don't already know Ty, he is the executive vice president at Acrisure. And Ty, buddy, it's great to see you, man. I'm so happy you're here.
Happy to be on, and glad you're having me. With the Rockstar theme, I have guitars in the background of my video here.
I noticed that. It's perfect. So if you're listening on Apple or Spotify or Google, check out the video on YouTube, and you'll see all the rock stars rocking guitars back there. Side note, wasn't planned, but I didn't even. Ty, do you play guitar? I didn't know that.
No, my son Mitch played a little. These kind of started. That's actually an A-flat guitar from the New York Horner played, and Mick Jones signed it. So I said, well, that's cool. And then I ended up with a Paul McCartney guitar, and then a guitar signed by Aerosmith. So I started just a little collection. It was
just a Paul McCartney, a little bit of Aerosmith. Yeah. No big deal. It's no big deal.
For good measure, I got Luciano Pavarotti over in the corner.
I see him right there. That mixes very well with the theme. Well, listen, Ty, I got a ton of questions I want to start with, but first I want to show everybody who's watching and tell everybody to go get your book. For those that don't know Ty, he is a 2-time Amazon bestseller. His first book, Diamonds Are a Man's Best Friend, or excuse me, a man's best friend, right?
Correct.
Yeah.
Yep.
Diamonds Are a Man's Best Friend is a book about baseball, and I'll let him share about that in a minute. But his new book, I'm holding it up on the screen if you're listening only. It's called Sales Mob. It's an ingenious American success story. Again, it's called Sales Mob by Ty Elliott. It's already a bestseller. Ty, before we get into Sales Mob, give us a 1-minute overview about Diamonds Are a Man's Best Friend, because that, no offense, Ty, but I get more excited about baseball, as you know.
Yeah. Well, Diamonds Are a Man's Best Friend was about 3 generations of baseball in our family, from my dad playing to me and my brothers to my son, who pursued a professional career. He played 4 years of minor league ball, and that that roller coaster ride was something that somebody convinced me to put down on paper. And really, it was such a joy to write it, because it was just telling our family story, and the feedback I got on from people we know was great. So it was a great project. And in that book, there's one chapter I just talked about the P-Town mob, which is actually what the sales mob is based on. So it was kind of a precursor to the second book. That wasn't planned originally. It just happened to.
That was my next question is, did you plan that?
No, the P-Town mob was such a good story, just personal story. And it was a big part of our lives as we went through this baseball journey. And in fact, baseball was kind of my connection to a lot of these folks that I ended up hiring and went on to have great success in the insurance business.
I see. All right. Well, don't stop there. Keep talking. So talk to us about Sales Mob. What am I going to learn if I'm listening to the podcast today that I can take with me and apply to my daily life?
Well, first and foremost, it is a book about sales, but it's not a sales instruction manual by any means. In fact,
okay,
I'd probably say there's a lot of things you shouldn't do in sales in that book. So it was really about, the background of the story is the P-Town mob. I grew up in Peoria, Illinois. I had a chance to start my career with Aflac. We took over at the time what I think was somewhere around the 497th biggest region in America out of 500. So it was one of the small. I think they just gave me a title in an old organization that was struggling and said, "Here you go." We had no idea what was underneath the hood until we got in there. But I started recruiting some guys I knew, with that baseball connection. A kid that grew up 2 houses down from me that played ball with my brother and Jim Tomey. Another guy that I played ball against and played with my brothers, and mostly younger guys. We had an office that was formerly an attorney's office, where if you walked up in, it was upstairs on a second floor. If you walked to one side, it was offices and cubes. The other side, there was a couple offices, then a penthouse where the attorney used to live. So it was pretty decked out, and of course I made that my office. But in that office, there was a bedroom and a jacuzzi and a deck, and we were right around the corner from a world famous Big Al's, which is a strip joint in Peoria. But you can imagine some of the chaos that went on with that setting, with a bunch of young guys that had never really had any success in their career and came on to Aflac, and we went from number 497 to the top 10 in 3 years. And then from there we moved on, and some of those guys came with me, and it was just neat. Out of little old Peoria, Illinois, there's about 7 guys that started on that original team that had virtually no insurance experience, and all went on to have very successful insurance careers. So I'm pretty proud of that, first of all. So we wrote a book about it, but the book kind of changed all the crazy stuff that happened behind the scenes as we were growing, and told their story. So I had to change the name to protect the innocents. But it's entertaining. The people that know us know who those people are. And the intent of the book was not to paint the picture we're just a bunch of wild men, but it is a little bit like Wolf of Wall Street in a way that it was pretty high energy, work hard, play hard environment. And I was the ringleader, but I was the calm one, just keeping everything together.
So you were Jordan Belfort and his dad at the same time.
Yes, kind of like that. Yeah, but I didn't do the drug part.
Okay, good. That's good. But just disclaimer. He didn't do the drug part. I got it. Well, look, that's fantastic. Full disclosure, everybody listening, I have not had a chance to read it yet. My copy on Amazon did not come until last night. From the day we're recording this, but I am going to read it because I'm not going to disclose, but I do know a lot of the people that are in the book, including Ty, and I'm excited because some of the stories I might have heard through the grapevine, but many I'm sure I've never heard. So that'll be fun. So yeah, pick it up. It's on Amazon. It's called Sales Mob. Check it out. And if you're so inclined and you're so kind, leave them a good review on Amazon. 5 stars, of course, would totally rock. So Ty, let's talk about business a little bit. You've been in the industry for how long now, in the benefits, voluntary, as I call it, enhanced benefits world? How long you been in the business?
I've been in the insurance business for 30 years, been in the voluntary space about 18 years now.
So when you were, and I didn't even know that. So when you were in the benefits business in the beginning for the first, 10, 12, 13 years of your career, were you on the broker side? Were you a medical person? Like, tell me about that. I didn't know that.
So in the VB world, I was considered a broker. I was actually a life insurance agent.
Oh, wow.
And one of my focuses a long time ago is, how I got into the business is growing up. In my early years of childhood, we had a nice lifestyle. We lived in a nice house. Dad always had new cars every year. He was able to, be at all our little league games, and part of what he wanted to do, he was in sales, so it gave him some flexibility. And for a little while, he sold some Aflac actually. But and then when I was in high school, all our coaches except one were teachers at a Catholic high school. So the Catholic schools in our area don't get to pay as much. So these guys were doing it out of their mission, not for money necessarily, but they had all older cars and they were just teachers and, making their teachers pay. But we practiced remotely. We didn't actually have a field at our high school. So in football, our linebacker coach would pull up every day in his BMW, get out in a really nice suit, walk in, change his clothes, and come out and coach linebackers. I'm like, what's up with this guy? 3:00 in the afternoon, every day he's able to come out in a nice car, nice suit, and coach football. What allows him to do that? Oh, and everybody said, I don't know, he's in the insurance business. I thought, there's something to that. So that was kind of my background. So I knew I wanted to get in the business, but I also knew that I didn't want to sell to people face to face in their homes.
A kitchen table.
Yeah, kitchen table. Dogs bite me in the leg. Although that did happen once on an Aflac story, when I had a Rottweiler had my neck in his mouth.
Oh my gosh.
But I wanted to learn how to sell to business owners at their place of business. And when I got into the life insurance business, there was a lot of need for life insurance, for succession planning and estate planning. So I built a pretty good clientele of business owners. And I was constantly approached by Aflac because before I got in the insurance business, I sold copiers as a means to learn how to call on business owners, knowing I wanted to get in the insurance business. So did pretty well with the copiers, got in the insurance business. One of the people I sold the copier to was the local Aflac regional coordinator. And so she always had her people out trying to recruit me. And I'm like, I don't want to sell that stuff. I don't want to sell that stuff. Not really understanding the power of what it did. And I'll never forget when I was doing some estate planning, I had an expert from New York coming in to talk to some of my clients, and we were dealing with their CPA. And the guy pulled me aside. He goes, Ty, you're doing great work here, but I want to share with you something. I do the taxes for probably 30 of the wealthiest insurance agents in Central Illinois. And he said, who the two that make the most money are? It's the two guys that sell lots of little policies. And that was one of those things that kind of hit me when he said it, but kind of stuck in back of my mind. And then once I got in the voluntary benefit business, I understood exactly what he was talking about, because of the volume of small policies. You weren't asking people for a fortune, only for what they could afford. So when we finally started introducing Aflac and voluntary benefits to my life clients that own businesses, I thought this is the easiest stuff I've ever sold in my life. And then we went full time and took on a region with Aflac, and that's kind of where the book started. That's kind of where the story started with voluntary benefits. So I was considered in the Aflac world a broker, but really I was a life insurance agent that happened to sell some Aflac.
I understand. Yeah, no, and I mean that still exists. There's guys like you still out there. Maybe they just haven't seen the big picture yet. So, and I never heard that story. So let's dig in. So you were with Aflac a long time. I know you left back in I guess the 2014, 15, something like that. Yeah. Yes.
End of 2015. Yeah. October.
End of 2015. Okay. There you go. So end of 2015. And then you went over to Acrisure, where you are now. You're executive VP. I believe, I could be wrong, your focus is still on voluntary, right? You're executive VP of voluntary. So correct. Let's talk about these days. Here we are. We're recording the show today in May of 2022. What's something big happening in the industry that maybe caught you off guard, maybe surprised you a little bit, maybe something happening that you wouldn't have predicted it 5, 7, 8 years ago when you started with Acrisure. Anything come to mind?
Well, you could see it coming, but what has the most dramatic impact is obviously technology. Mm-hmm. And where I see two things converging is technology used to be in some ways the enemy of VB, from the standpoint technology was great to make things more efficient, reporting more efficient for the companies. But when it came to communication, those health brokers that were used to using a platform for enrollment or even management failed to tell the story of the power of voluntary benefits. So typically back in, is really as short as 10 years ago, maybe 10, 12 years ago, you primarily saw extremely low participation in voluntary benefits when introduced along with a health plan on a technology platform without that interaction of that education.
Sure.
Meanwhile, on the other end of the spectrum, there's almost the insistence on the dominant players in the industry. We have to have face-to-face. We have to have face-to-face. We have to have face-to-face. So face-to-face drove the highest participation. And you could argue because it provided education, or you could argue it provided pressure. However, whatever lens somebody wanted to look to it in, and it was a picture of both. But that's where you were going to have the most success selling. Now, for the people that do it right, that face-to-face was moderated, where it wasn't a high-pressure sale. It was truly educational. And then that backup, that follow-up of service in the account was critical. But as technology developed and we started to have the ability to communicate and educate through technology, whether it be web-based, call center, video, Zoom calls, that started to really catch some ground, because we're still getting that opportunity to get in front of a client, get in front of the employees and educate them on the benefits. So you started seeing participation creep up with engagement. And then you started layering in decision support tools. Obviously, culturally in our society, people got used to buying on their phones and purchasing products on the internet and doing these things. So those are, they're still converging. And then COVID kind of rapid advanced them. So we were fortunate at Acrisure. We were working with, at that time, outside partners for enrollment and execution of many voluntary benefit plans. So they were leveraging call center, video, electronic scheduling, text messaging. So they were still fulfilling that educational piece and that one-on-one personal touch and communication, but doing it in a way where we weren't going to have access face-to-face. And I really think that COVID changed that whole mindset, that I don't know if we'll ever get back there. When we do have the opportunity to get face-to-face, either in a group setting or one-on-one with employees, obviously there's a benefit to that. But interestingly enough, tailing that, not as is affecting our industry, but just all industries, customer service may be at the lowest point in my lifetime. I can't tell you how many times I've sat on hold or just was ready to throw the computer through the window because I couldn't, my answer was not, I needed a 5-second answer, and I had to go through a half-hour process to go to a chat room or email something, or be on hold for an hour. So I think that's creates opportunity, because now somebody's got to figure out how to fill that customer service void. And the voluntary benefits, is well suited to do that if we do it right.
Yeah, I mean, I echo everything you just said. I mean, to what you just said, literally the customer service side. I mean, a lot of companies, big and small, obviously, we all know are struggling to find good workers and keep talent, which is going to make your hold times longer, half hour, 45 hour, 2 hours. I mean, I've been there, I've done that. I want to throw it out the window too. But going back to what you saw evolve, I mean, I agree with you. I mean, I tell partners of mine all the time and brokers and employers that I had a pro Zoom account before it was cool to have a pro Zoom account. Yep. Pre-COVID. We started doing self-serve open enrollments and new hires before COVID, and COVID only helped us. I think you might agree. I mean, for me to talk to an employer or a broker and try to convince them that self-serve is the best, it was tough for them to wrap their head around that. It was a hard sale. They knew it could work, but they would, every excuse under the sun. Our employees don't have technology. They don't know how to do it. It's not going to work. And I was able to do it, but it was hard. And then COVID hit. And I tell you what, I'm not grateful for COVID, but from a business perspective, that just helped my cause to the nth degree. So I guess my question is, and you mentioned it earlier, if you have the opportunity to do an enrollment face-to-face, in person, more old school way, do you still would you push that with an account, or would you still defer back to the technology and how sophisticated it is now with the call center and video and all the stuff you mentioned?
Really, that really depends on the account and how the employees are set up. So
Right.
I don't think I would ever push one-on-one, because I don't think there's a reason to. Why run into a resistance point? But we still have clients today that want us to do that. Say, hey, I'm having a safety meeting for all my employees, and we're utilizing voluntary benefits to help keep our work comp claims down. So we need to educate them. So can you come in and talk to the people? And so they really get it. So I know they really understand how to utilize these benefits and what's the difference are. So in that case, there's still clients that want us to come in, or they have employees that have a lot of questions, and working hand in hand with our health brokers. Maybe it's a change in the medical plan, so they really want to sell the understanding, because the competitive landscape, as you mentioned, for employees is at an all-time high.
Yeah.
So it's not only going out and purchasing and trying to structure your benefit plan as an employer. How do we really engage people and differentiate ourselves that this is a company you want to come to work for? And one of those keys might be, look, we have real live people you can talk to if you have questions about your benefit program or how to set them up. So I think it's opening up doors kind of full circle, where it totally got away from anybody wanting to have, come within 6 feet of you to hey, this is an extra touch. Not only are we going to provide a strong benefit plan for you, we're going to bring in personal counselors to help you walk through this. So I think there's a value add there where, again, that kind of went out of style and can come back in. I don't think we'll ever get back to the level of engagement we have in a face-to-face or group settings pre-COVID, because it was a cultural changer.
Well, let's keep talking about this. So let me ask you a direct question. I asked a bunch of folks I've had on the podcast over the last year or so. I asked this to Tim Arnold, CEO of Colonial. I asked this to Adam Michaels. A lot of the people listening today might know Adam Michaels. And I asked a bunch of others. Are enrollment firms dead? Are enrollment firms dying? Is there a need for an actual textbook definition of an enrollment firm in the year 2022 moving forward?
I definitely wouldn't say they're dying. I would say there is a need, and maybe a bigger need than ever, but I think that it's definitely evolving. That industry is definitely evolving to where it's not enough just to be an enrollment firm to enroll either the voluntary or even the core and the voluntary together. It's how are you fitting into the overall strategy of who's generating that business? If you're an enrollment firm, you're primarily dealing with brokers. Are you embedded as a part of their turnkey strategy, or is it just, hey, I got a case here, throw you in? And the amount of competition you had, this primarily it was Aflac and Colonial that had massive armies of 1099 employees, sales folks, and there's a lot of pressure on that part of the industry. So people, because of technology, people have different tools and they can build their system different. They want to differentiate themselves, so they go outside the market. So I think the pressure is not coming from a consolidation of need. I think the pressure is coming from there's so many people, more people than ever in that space, or at least identifying themselves as enrollment firms. Carriers are starting their initiatives. You mentioned Adam; he's got a unique model that looks very successful. So it's just different ways that you're engaging the market more than it's dying. I wouldn't say that. I think the opportunity is bigger.
So yeah, I mean, it's funny because I get confused as an enrollment firm all the time, and I'm not an enrollment firm, at least not in my mind. We handle enrollments as a company, but I don't have enrollers. I haven't sent an enroller out to an actual enrollment, and we're in all 50 states, but I haven't sent an enroller out to an enrollment in gosh, 7-8 years. Like, we literally are utilizing the technology that just keeps getting bigger and better. And we're doing self-serve enrollments, and the participation is through the roof, particularly when you market and do it properly. So it's funny because 20 years ago, Eric would have punched this Eric in the face and said, you're crazy. It would never work. But let's be honest, the technology didn't exist then. So I was a bit gun shy to try it, but it's been amazing. I mean, very limited overhead, no headaches, no complaints that the enroller showed up late and said something that offended XYZ person. So, and everything's digitally tracked when you do it online. There's a fingerprint. It just happened the other day. We had a client call us and said that one of the employees is swearing they didn't sign up for something, and we didn't have a call center. It was all 100% self-serve, and we have the digital footprint to prove it. So we didn't want to argue with them, but we said, I don't know what to tell you. Like we didn't click the button, and we didn't even have a call center because the HR team didn't want a call center. So are you seeing a lot more self-serve enrollments and happening with or without call center specific?
Yeah, in fact, and that's kind of what I was alluding to earlier. And I'm the same boat you were. I would have recommended against that all day long. But with better communication tools, better technology, and really the cultural adaptation of people used to be purchasing through their computer or the phone has made that. To your point about enrollment firms, I think they face the same challenge we do in labeling our industry voluntary benefits or essential benefits or whatever you want to call us. What does that really mean? Because some health insurance is voluntary.
Of course, absolutely.
So you get stuck in a category, and I think the same with enrollment firms. There's enrollment firms that have enormous capabilities to do a various amount of things. There's some that are very focused. So the way you're set up, I could talk to 10 different enrollment firms that I know personally, including you, and there's 10 different ways you approach. You all end up in kind of the same place, but there's 10 totally unique approaches. So that's where I think you unfortunately get slapped with a label as an enrollment firm because you're fulfilling that enrollment, but you're doing it in such a different way that you're
I totally agree.
Execution,
Yeah, no, I totally agree. And that's the thing is we're conducting and fulfilling enrollments, but the reality is I don't ever label myself as an enrollment firm because when I hear and most brokers say the word enrollment firm, they're thinking of boots on the ground all over the country, deploying people, doing group meetings, sitting down knee to knee. That's my definition and typical their definition of an enrollment firm. But I don't like that term any more than I like the term voluntary because you're right. Everything's voluntary. So I don't use that term. I use the term enhanced benefits. I don't care what you call it. At the end of the day, everything's voluntary. It's voluntary for us to do this show today. It's voluntary for a listener to listen. So we could go on, but let's take that theme and keep moving. So what I'm experiencing and seeing is these days, quote unquote, voluntary isn't so voluntary, meaning I've seen it pick up a lot of steam over the last many years where employers are actually funding the products and services that are traditionally known as quote unquote voluntary benefits. They're funding them completely. They're partially funding them. Some of them are giving the employees just a benefit bank of spending dollars. Are you seeing that? What are you seeing? And do you think that's going to continue, or is that just because of the market right now? Like, what's your thoughts on that?
I think that's going to accelerate. The change is going to accelerate. So to your point, where our business changed is up until 2010, the vast majority of quote voluntary products were sold by primarily 3 carriers. And they were sold direct from an independent field force. The broker, the relationship people, and was part of our success with the P-Town mob was I thought, well, the brokers already have the relationships with the clients, so why don't we talk to them? It wasn't rocket science. Instead of banging on doors cold, why don't we just work with these brokers, show them we can make them money, and we had a lot of success with that. So, but what really changed in 2010 is you still had the health insurance broker mentality that they wanted to be. Health insurance was so transactional. If I was a good broker, I'd build up an account base, I'd service it every year, and I'd naturally have growth in revenue because the rates would always increase and my commissions would always increase. And, there was
carriers are giving you a raise every year.
Right. There was complacency, but it was also more of a not more of a service bent, but more they were as concerned about maintaining their book as they were about growing it, because the growth was naturally there if they could maintain it. So they really became order takers or getting creative on advice on how to do it in 2010, and still looked at voluntary as that extra stuff. And usually they only looked at it in the framework of, okay, I got a high deductible and high out of pocket. How do they fill the gap? That's how the health thought about it. How do we pay somebody else? And they dismissed in large part the messaging of what these programs really did. When Obamacare came along, and all of a sudden the effect was more and more out of pocket for the employee. Now the brokers, they still weren't getting it, but they saw there is a need. You know, I know that none of these employees that I'm dealing with in this company can afford a $2,500 deductible or $5,000 out of pocket. Nobody, you know, a handful of the employees out of the 100 might have the resources to do that. And I got to find a solution. How about those voluntary products? Boom, here they are, here they are. So that really opened up the broker market. And now the competition among brokers got heavy on to compete for VB, and some did it way better than others. Some really dove into it, you know, started figuring out how this stuff is really sold, and others just kind of tacked along and rode the wave. So now what's happened is, with this competition for employment, we've been talking for years about attract and retain employees. These are benefit to attract, and I think it got so white noise-ish that it really didn't have any, no employers really believed that it was going to move the needle that much on how it was going to help them attract and retain. Today, they're really interested, like, okay, I need every advantage possible to differentiate my company so I can not only attract but retain employees. They're moving all over the place. So now taking a look at voluntary, it's a whole new world. And now it's allowing them to open up their minds and discover how powerful these benefits can actually be. So I think the upside is huge, but I think we're going to see the huge transition is going to be in the health insurance space. Now that the employers are starting to have to pay for, you know, going back to, we got to pay for benefits. Let me see what I'm paying for.
Right.
You know, and you know, the Maverick Healths of the world are looking at things differently. Why am I paying? You know, why am I getting taken down the road on prescription drugs? Why am I paying for this? Can we self-fund this part? The insurance company's making a fortune off me. What if we looked at doing our whole structure different? And really, that's where a voluntary benefit expert can come in and say, how do voluntary products fit into that strategy to really make it a robust plan? So I think that's the next wave we're going to see.
Yeah, no, spot on. I mean, look, I don't know what your numbers are, and by all means, you don't have to share, but you know, I'm not the size of Acrisure, for heaven's sakes, but you know, we do fairly well, and half of our business, new business each and every year. And it's been this way since, frankly, prior to COVID, are employer funded or have some component of an employer funded mechanism. And you know, I say to everybody, you know, people always ask me, how do you get that? How do you do that? Ask for it, talk about it. Tell somebody that it exists and that it can be done and that it's a good thing. I mean, isn't that kind of sales 101? I'm not a professional sales trainer here, but I think I know a thing or two. You have to ask for the order. You have to explain it and share. And it just blows my mind how many really big time enhanced benefits or voluntary benefit carrier rep managers out there in the big carriers and even voluntary benefit brokers. They tell me, wow, I haven't done that yet. How do you do that? And I'm like, you just have to talk about it. Like, I'm an open book. I'll tell everybody my secret, but it's not a secret. You just have to explain why it's a benefit to the employer. No different than what you just talked about, particularly when it comes to actually tangibly and physically keeping an employee and getting employees to come work there. So, well,
it goes back to the labeling. When you call them voluntary benefits, your mindset is down that path. Or these, and really, quite frankly, in our own industry, we created that monster in a way, because part of our sales pitch is we can enhance your benefits. It doesn't cost you anything.
Right. No cost. No, you're right. I did it forever. I did it for 15 years. Yeah. Let me ask you this. What's a trending product mix that is popping up? You know, I don't want you to tell me accident, critical, cancer. That's stuff we already know, hospital, disability, life. I get it. But what's something out there that you might be seeing at Acrisure that a carrier guy listening or a broker lady listening, somebody can really, you know, do some research on and think about adding to their repertoire?
Well, you know, the ones you mentioned are the staples, obviously.
Right.
There's never been, I don't think the statistics have changed in 50 years on life insurance about how many people are underinsured when it comes to life insurance. And that's obviously
For sure.
big. With legislation coming down in the state of Washington, the landmark case where, you know, basically mandating people own long-term care policies. We were able to really capitalize on that. Long-term care, straight long-term care is still very difficult to sell in the workplace. Not because there's not a need or a recognition for the need. It's just a different it's just a different animal. But when you have that long-term care component or benefit from a life insurance policy, you're selling the life. You're selling the life need, which is there and very real and understandable. And that LTC becomes an extra component. So I think that's a huge product in the marketplace. And then as we get into these other products and services, I think you see evolution. We have one guy that's over what I call the secondary voluntary benefits, which is terrible labeling, but but you know, these other benefits that aren't related to health.
Right.
So,
non-medical.
Right. Even as far as, you know, I remember when
you typically don't even need an insurance license to sell them.
Exactly. Now, some you do. I mean, legal insurance for centuries has been a big item in Europe, and we see more and more of it. You know, I despise dealing with lawyers, but sometimes you have to. And you know, several times in my life, that's been a big expense. So, you know, we're in a very litigious society. So that's definitely somebody's got to consider in their overall financial planning. Pet insurance. People used to laugh about it, but shoot, I go out to our agencies in California and every office in the building has a dog or a cat in it.
Yep.
And people, and you know, I have 2 dogs. I know how much money we spend on those things. So it's a risk management tool that happens to fall in the category of voluntary benefits because typically that's how it's paid for in the marketplace.
No, you're right. And look, and I'm sure you're positioning it no different than I always encourage brokers to do it in the way that we do it. You know, I'll follow my sword. We got to be selfish for a minute. We're for-profit entities, right, both you and I. I don't find there to be much comp in a pet policy. However, if you're only selling a pet policy and that's the only product, then you're right. You're going to do a lot of work. You're not going to make much money. If any, you'll lose money, quite frankly. But right, the popularity is skyrocketing. And from a marketing perspective, as we know, people are more apt to get an email or a text that says, hey, this year we're introducing pet coverage, log into your system and learn about it. And then they're legally forced to go through the prompts to learn about medical and accident and critical and all that other stuff. You know, it's an active enrollment opt in. So the reality is the pet coverage makes everybody a lot of money and it does a great benefit for the employees and the employer, but you have to see it for what it's at. It's really more of a, I don't want to say it this way, but again, lack of a better word, people can appreciate this. It's great coverage, but it's vis-a-vis clickbait for lack of a better word. Right. It's getting them excited. And frankly, people get more excited for their pet than they do to learn about an accident plan or a disability plan. It's sad as a professional in the insurance business, but we know it's true.
Yeah. Well, and I used to believe, and we told our salespeople this, the average employee that's buying a cancer plan or an accident plan usually isn't buying it because they think they're going to get cancer, they're going to get an accident. It's because if something happens to their child or their spouse, they want to have that coverage and just in case. So yeah, people are less introspective, and like you said, they sometimes care about their pets more than anybody. So here's an avenue to open up the door. But you're right, you got to have that balance. Where's the profitability as a salesperson or a broker, and what are you really trying to accomplish? So I think, you know, the college tuition type products, very low margin, your purchasing power, and these type of programs allow discount.
ID theft, fraud protection, stuff like that.
Now, the one I'm most intrigued with, and I'll acknowledge we're not doing a ton with yet, is the ability to, I think this is a great societal tool. And I think as an employer, definitely something that I would want to provide for employees because of the nature of human nature and handling money. But there's lending programs out there that, you know, the problem is most banks will only lend you money when you don't need it. And employees living paycheck to paycheck, if they have a need for financing for whatever reason, they're either going to go to a bank for the best rates they can get. And if they can't, if that's not an avenue, which it's not for 90% of people, they're going to the juice market. You know, they're paying credit card interest or, you know, payday loans or, you know, and it's just driving poverty more and more into people that already are struggling. So it's almost criminal. I know there's legislation about it and there's arguments both ways, but really you're charging people. You know, I was blown away. I think I was in Texas. I was pulling up to my hotel, and we were coming down the road, there was one building, a standalone building. Half the building was a casino and the other half was a payday loan. Mm-hmm. That's almost criminal. So these lending programs, they can analyze and look at, you know, the income, the length of employment. So if it's a steady employee that's been pretty steady on their income, they can now do it based on their payroll, have it structured in a way that it comes out of their paycheck. So it's functionally very well, but it's competitive interest. It's single digit interest for a loan that you can get through your paycheck. So to me, that was the most intriguing. And I said, we haven't launched into doing a ton of it. Back to your point, not a ton of money into it, maybe long-term. So if there's focus, but I think it's an extremely valuable tool that can, I think, shift some of our societal challenges, and definitely in an environment where you have, you know, the competition for employment. I think it's a pretty cool tool.
Well, I think what you describe is spot on. I also, you know, some of the things I've been doing over the years, and we've placed not a ton, but we've placed some business, is with the accrued pay, where employees can have access to their pay immediately. So like we all know that the standard employer pays weekly, bi-weekly, semi-monthly, or monthly, and that's not good enough for a lot of employees who don't make a lot of money. So the ability to get access to their already accrued daily wages the very next morning is huge. So you and I, today we're recording this on a Tuesday. The work week started yesterday. It's the beginning of a pay period. If I need whatever I made yesterday, I could literally dive in and take that money out of my paycheck from yesterday today. And it's kind of like, and the charge is like an ATM fee. It's nothing. Right. So we don't have time to go into details, but we've been seeing a lot of that. And that becomes really exciting for employers to really do things differently. When you're competing for labor, an employee's going to be quicker to come to you if you have a program like that than they are going to be to go to a competitor that doesn't. So look, in our last couple minutes here, talk to me about your vision for the enhanced benefit space, the voluntary space. What do you think? Just a lot of what we just talked about, or is there anything on the horizon? What are your predictions next 3, 4, 5 years?
Next 3 or 4 or 5 years, I still think we're going to see pretty steady growth, hyper growth, if you will. It's going to be a boom. I don't think there's any magic bullets come along, but we will see a lot of changes in the engagement of the employees, just because, as we talked about, technology. So I think that's going to look a lot different. I agree with you 100%. We're going to start seeing more and more employer paid options, which is going to change the landscape a little of how the carriers approach the market. We have, as you know, more carriers than ever in the space. Mm-hmm. So that competition's already taken place. And I think we'll start to see, at least with some larger companies, a march towards a captive type arrangement where they're taking on more of the risk, because quite frankly, there's a lot of profitability in the carriers for this product. So people, sure, as they start analyzing their health spend and other spends, they're going to, just like everything else, they're going to consolidate and look for different ways to create efficiencies. So I think we'll see more employer paid and more negotiations with the carriers on the products, or at least negotiation through consultants and brokers. So I think it's going to be a very active market the next 5 years.
Do you, I agree. I mean, do you see that, you know, you're Acrisure, you're in charge of VB, but as a firm, I mean, you guys, I imagine, are going to continue the growth. I mean, I've seen more and more brokerages and even VB shops and enrollment shops and PNC shops getting bought by companies like yours, and certainly yours. You're one of the biggest.
Right.
Is that going to continue trending upward?
Absolutely. Absolutely. I mean, it's a commodity. We buy a ton of PNC shops, and what we look for, and I'm sure many of the people in our space and our competitors are the same way. We're looking for businesses that standing alone are growing, profitable, with upside potential and succession planning. Those are really the key elements. If you can meet those four and you got a niche, what we look for is somebody that's not looking to make their game on joining us and just saying, okay, now I'm inside and now I got all these partners I can deal with, because you create internal competition. It's I can continue to grow my business on my own, but as part of your organization, I can accelerate my growth. And with that will come the ability to work with other partners in our system. So yeah, I think the consolidation, I think it's going to happen in the enrollment side too. I think you're going to see massive consolidation because there's just too many fractured entities doing it, and you'll see a lot of that start to come together.
For sure. Well, listen, Ty, it's always a pleasure chatting with you, man. I appreciate it. But for those that are listening, kind enough to stay in tune, I appreciate you always. If you're watching on YouTube, make sure you check out those cool guitars behind Ty. If you haven't already connected with Ty, you can connect with him on LinkedIn. Just find him there. He's right there, Ty Elliott. And Acrisure, of course, Acrisure.com is the main website.
Correct.
Yep. And then if you haven't already gotten his book, get it. Go get it. Go get Diamonds Are a Man's Best Friend. That's his first bestseller. So if you're a big fan of baseball, go get it. And this one right on the screen, Sales Mob, an ingenious American success story, Amazon bestseller, Ty Elliott. I appreciate you, my friend. We've known each other a long time. And look, I just show up and ask some questions and have a little fun. I don't do any of the back office stuff. So that's a lot of work. I don't want to do it. So for everybody behind the scenes at the Rockstars Rocking podcast, I'm Eric Silverman. That, everybody, was, and always will be Ty Elliott. And don't just have a great week, make it a great week, and we'll see you then. Thanks, everybody.
All right. Thank you.
Thanks so much for tuning into this episode of the Rockstars Rocking podcast. If you haven't done so already, make sure you're subscribed to the show wherever you consume podcasts. And if you feel so inclined, please leave us a review. 5 stars would totally rock. Until next time, Rockstars, keep rocking.